Let's head to the markets now. The Australian index is off to a rocky start this morning, with broad selling taking the ASX 200 to its lowest level in a week. Sky News business reporter Chris Kohler joins me now with some details. Chris, a pretty shaky start from the local index. What's going wrong today?
You can certainly say that, Tom. Look, it's been a bit of a weak entry into the day. The local market, as I talked to you, down about 0.8%. Now, this is selling across the board. As you say, lowest level in about a week. And if we close at this level, it'll probably be the worst day in about 2 weeks on the local market. Now, it's probably not a good idea to get too doom and gloom about it, of course. Last week, the ASX 200 did hit a 12-year high on Wednesday, so coming off a pretty high base there. But look, today that seems like a little bit of a memory. The selling is across the board, all major sectors in the red. Industrials leading the way, down 1.4%. But yes, financials down about 0.5%. Materials, which led the way yesterday, down about 0.7%. The worst performing stock today, Downer EDI, slumping about 9% after a downgrade from Credit Suisse. And look, Domino's Pizza still getting kicked around a little bit, now down about 7% in the last 2 days, again after analysts downgraded their recommendations on that stock there.
Yeah, I guess it had to come to an end. Some pretty strong gains of late. What about the bond market, though, Chris? Some interesting signals. What's happening there?
Absolutely. This is where everyone's been looking today. There was a pretty interesting signal sent this morning, which is that the Aussie 10-year bond yield fell below the RBA's policy rate, which is 1.5%. Now, that's the first time that has happened in about 3.5 years. So a pretty big indicator that the market does certainly expect multiple interest rate cuts over the next 12 months. Basically, economists are falling over themselves and each other to re-rate their expectations when it comes to the RBA cuts over the next 12 months. They're expecting a cut of 25 basis points this next Tuesday, and we'll be there to cover that, of course, if and when that happens. But yeah, look, the one today to talk about was JP Morgan, which now thinks that there are going to be 4 rate cuts coming from the RBA to take the official cash rate to 0.5% by mid-next year. That is certainly very low. We're already at a record low level now, so cut another 100 basis points off. And it's certainly pretty bad news for anyone who's got money in the bank that they're looking for interest rates. But look, you know, the mortgage market will be celebrating that, of course. Now, Westpac's Bill Evans says 3 interest rate cuts is what to expect. Capital Economics the same. Look, it certainly seems like it's going to be cutting season over the next few months for the RBA.
Basically, this Tuesday meeting, Chris, the expectation now is so strong. I think Jules would drop without a change, without a rate cut, right?
Yeah, pretty much. Look, it's just now a question of what the banks are going to do, because there really is no guarantee that the lenders are going to pass on the full 25 basis points to mortgage holders. In fact, Deutsche Bank last week said that you should only really expect a fraction to be passed on by the lenders because they have to protect their margins. Now, this, of course, is a huge factor as to how effective this interest rate easing is from the RBA. So all eyes are going to be pretty much immediately shifting towards what the banks do, but certainly big expectations for a cut this Tuesday. A second one probably in August, and then one more maybe by the end of the year.